What are the top first-time homebuyer programs here in Michigan? What's going on, everybody? Nick Ottenbacher, your Metro Detroit real estate connection. If you want to know everything from living, dining, sleeping, buying, selling in the Metro Detroit area, you're going to want to hit that subscribe button and tap the bell to be notified every single time we drop a new video. And I absolutely love when people call me, text me, or email me because they're thinking about buying or selling real estate in Metro Detroit. So if you have any plans to buy or sell real estate in Metro Detroit, call me, text me, email me, or even send the pigeon carrier because I'd love to help you. Michigan's economy has, experienced its ups and its downs over the past few decades. And population decline in the national housing crisis have driven prices and mortgage rates down, making home ownership more attainable in the state. And some cities are even paying people to move there. Additionally, both the federal and Michigan state governments have created mortgage programs specifically for first-time home buyers. And when paired with grants and tax credits, these can make home ownership both cheaper and more accessible. The first program we're looking at is an FHA loan, very, very common for first-time home buyers. And the pros of an FHA loan, you need low down payment and a low credit score requirement. Some of the cons is, you do need a larger down payment needed for those lower than a 580 credit score. And to be eligible, you need at least 3.5% of the home's purchase price as a down payment and a credit score of at least 500. And this fits best for homebuyers with a strong credit history or sufficient savings. And to get the program's biggest perk, you need a credit score of at least 580, because if yours falls between 500 and 580, you're going to need a 10% down payment. And this loan really matches with any other loan, minus one thing: you're going to have an extra inspection from your appraiser. So if you're competing with your FHA loan versus cash, the seller's probably going to take cash if it's on the same playing term and same terms. If you're playing FHA versus conventional loan, again, the seller is probably going to take the conventional loan, considering it's the same terms between both offers. Next up, we're going to talk about the veterans loan, or also known as the VA loan. The pros is you have a very low down payment, no private mortgage insurance requirement, and it typically comes with much lower closing costs. The cons: the application process can be drawn out. It also requires payment of a VA fee. And to be eligible, you must be a current or former military member, spouse, or other beneficiary, and a credit score of at least 620. And this is best for the low to moderate income veterans with limited savings. And to qualify, you're going to need that credit score of 620, and you also may need to pay a VA funding fee, which can range from anywhere to 1.25 to 2.4% of your home's value. And aside from the funding fee, there are very few associated costs with a VA loan. Since the government will back part of your risk, you won't have to pay for any private mortgage insurance, which is typically an obligation if you're putting less than 20% down. Next, we're going to take a look at Fannie Mae, Freddie Mac home loan program. And the pros is you get a low down payment, a low credit requirement, and several different loan styles available. The cons is you're typically looking at a higher interest rate than other federal programs. And to be eligible, it's only in some areas, and then in some, there's no income requirements. And it's best for anyone that can't afford a typical down payment and doesn't qualify for other federal programs. In most federal homebuyer programs, necessitate the use of an approved lender. The Home Ready Loan from Fannie Mae requires down payments as low as 3%, making it a great choice for anyone who hasn't saved enough for a standard down payment. And to qualify, borrowers need a credit score of at least 620, and borrowers also need to earn an income at or near the US median. And with a Home Ready Loan, you must have private mortgage insurance at the time of purchase, although you can cancel it as soon as you've accrued 20% of the equity. And lastly, we're going to talk about the Mishnah Down Payment Assistance Program. The pros is you get up to $7,500 to cover upfront costs of ownership. You get a 0% interest rate. The cons, it must be repaid. And to be eligible, you must be a Mishnah lender and must complete a home ownership education class. And it's best for anyone looking to take advantage of a Michigan Home Loan or Michigan Loan Flex program. And the Michigan State Housing Development Authority offers a no interest loan to help Michigan Home Loan and Michigan Home Flex loan participants cover the initial costs of home ownership. The amount's going to look at either $7,500 or 4% of the home's purchase price, whichever is less. And the Mishnah Down Payment Assistance Loan doesn't require monthly payments, but it must be repaid before the home is sold, refinanced, or paid in full. So that's one of the best ways for you to get into a home, to save money, to get help towards those closing costs and those down payments. If you're a first-time home buyer here in Michigan, I'm not personally a lender, I'm a real estate agent, but if you need me to connect you with anybody that's gonna help you, make the decision with the best loan for your situation, definitely reach out, and I'd love to show you some homes.